It is time for...
This is Pimp My Portfolio. Pimp My Portfolio.
All right, well, welcome to Pimp My Portfolio, that time where we bring in an expert and a community member to get their portfolio pimped. We have our expert, Luke Larative from Seneca. Luke, how are you?
Bryce, how are you, mate? Ren?
Hi, mate.
Good. Ren's here as well.
I'm just imagining Luke as Exhibit from My Right.
Oh, my
He's got a lot more hair
goodness.
than I do.
Yeah, true.
And we have our community member today submitting their portfolio. It is Hollie. Hollie, welcome to Equity Mates.
Hello, thanks for having me, guys. Super looking forward to it.
Now, Ren, as always, what have we got in Hollie's portfolio?
Yeah, so Hollie's portfolio is anchored by some big ETF positions. The Beta Shares Diversified All Growth ETF, iShares S&P 500, and iShares Global 100. Together, they make 75% of the portfolio. So a big core position. And then around that, there's a few individual stocks. BHP about 10%, Woolworths about 5%, and then Northern Star Resources, Pilbara Minerals, Woodside, so a few resources companies, and then finally Appen. So that's the portfolio. Luke, what's the nickname?
The nickname for Hollie's portfolio is... What happened, Hollie?
Ouch.
Did you say what happened?
What happened? What happened?
What happened?
Yeah, I love a pun.
Sorry, that's bad. That's really bad.
So context here. Well, Hollie, how about you talk us through the portfolio and maybe shed some light on why you think Luke's given that name.
I mean, I love a good pun. It can't be as bad as Luke's infamous all punt, no process nickname.
Is that getting a run, is it?
That one.
Your reputation precedes you.
Oh, okay, good. I like it. Putting the fear of God into the Equity Mates community.
Literally.
Yeah, the Appen, to be honest, that is a terrible way to start, but that was actually my very first investment.
Oh, lovely. That's what we like to see.
Yes. That was a good start. So classic first mistake. I just heard about it on the grapevine, did none of my own research, lost pretty much all my money in that.
Can you just tell, just because I think it'd be interesting for people, what would be like your one or two like key takeaways from like the experience of buying a share and like logging on every other day or whatever and seeing it like go down and worrying, and like what are some of the like maybe emotional or behavioral things that you've kind of like learned about yourself during that process?
Yeah, so that pretty much was the start of my investing journey, was putting $1,000 in Appen and just watching it go down.
Yes.
So I was like, this is fun.
We're not laughing at you, we're laughing because we've all done it.
No,
yeah.
Yes, I know. It's such a classic. So I actually bought Appen purely because my boyfriend had it. So full disclosure to his portfolio, he always tells me to do my own research, and he never gives me any stock tips. I picked this one all on my own.
Surprised he's still your boyfriend.
So yes, shout out to him for this one. But watching it go down every day, I guess it just shows I didn't really do my own research in the company. So I always just kind of held on to that hope that it would come back. But then again, I don't know enough about the company to know whether or not it will come back. It's honestly still in my portfolio because I'm a bit slack. I haven't sold any shares ever. I've just always held. And I guess it's just a daily reminder of not to invest in things you don't know about.
Yeah, keep it in there. Daily
Look,
reminder.
Yeah.
Asterisk, general advice, but like it is almost the 30 June. And if you were looking to take sell a share, now is not a bad time to do that if it's not a...
There's honestly, I don't think you guys... Yes. No, I don't think you guys get actual dollar values in there, but there is such a minimal amount that I just don't care anymore. So yeah, I pretty much already have lost all my money.
Yeah, but might as well lose it at the tax department, I suppose, is probably what I'm trying to say as well.
I think
because if you if you sell it and you claim that loss, it can offset a capital gain.
Correct.
Yeah. So that's the.
Yes.
There's still value in the loss,
And the losses carry forward.
Yeah.
So it's you don't have to use it this year. You can use it next year or year after or whatever.
So Hollie, I wanna
Yeah.
make you feel a bit better because I had exactly the same first experience with you. I put my first $1,000 into a company. It was Slater and Gordon, and I actually lost so much money that I couldn't even cover the brokerage to sell it. So I somehow did worse than you. But to make matters worse, as it was falling, I had internalized that idea of buy low, sell high. So as it was falling, I put more into it. So trust me, however bad you're feeling, you still could have done worse.
I could rattle off 10 like
Okay.
that.
But I think for me, the big takeaway for both of you is that it wasn't a moment where you said investing's not for me. I'm out for good.
Yes,
Ren,
like that.
Yeah.
Ren
Like that.
subsequently went to make some great investments, and Hollie, it looks like you're certainly well on your way to creating a pretty decent core portfolio. So Luke, what are your initial thoughts here?
Again, I'll just do the stocks quickly because it's kind of boring. Who cares what my opinion of stocks are?
That's literally
why
why
you're
we
here.
Yeah, but like it's just like everyone's got a different view. I could talk you through the thesis, but it's kind of too long. So look, we don't mind Woolworths for a trade at the moment. We bought that not too long ago after the pretty average results. I think it looks cheap and obviously reasonable business, sort of semi-monopoly type vibes. So don't mind that at these prices. We are very long Pilbara Minerals, so I think it's my second biggest weight in the Seneca Australian shares, large cap SMA at the moment. So we like that. We like lithium. If you want to read my lithium thesis, just Google Luke Larative and lithium. You'll find 1,000 articles. Northern Star seems a bit expensive to me for gold exposure at the moment. That being said, they're all kind of expensive on the ASX, so don't ask me for an alternative. Woodside's a bit of a mess. It's kind of got flat sales growth forecasts out into the future, kind of trying to do some Fugazi renewable energy thing that's not really kind of working. So their best assets are now fully exploited. So I would argue, what are they going to do next? Anyway, that's the stocks. Appen, you know the drill. You don't need me to tell you about that.
Hang on. Firstly, Hollie, what I reckon you do is internalize those sort of one-liners on each of those, and then when you're at dinner with your boyfriend tonight, don't tell you're on with Luke, and just spit out some facts about these portfolios, about these companies.
God, I'm sure he'll be impressed.
So what do you think about the exposure to ETFs?
Oh, BHP is the other one, sorry.
BHP,
yeah. At BHP we own, we're underweight. So I kind of think that's a little bit expensive, but I think the Anglo deal is a good deal. The market won't like it, but on a 3-year view, that'll work out the best for them. And the Anglo's got some kick-ass assets. So, okay, so that's that. On the ETFs, I think that there's overlap. We always kind of bang on about overlap in ETFs. And probably, given your other ETF holdings, beta shares, diversified or growth would probably cover, I think, all those. That's like just an equity only, isn't it?
Yeah.
Global, yeah. So that would cover your S&P 500 and your global 100 stocks. So all you're doing there by adding those two extra is like overweighting large cap relative to sort of mid cap and small cap. So I would probably not do that, but that's just me.
And so, Hollie, just or for people listening at home who are just wondering, the beta shares diversified all growth is basically the global stock market. The S&P 500 is the US stock market. Global 100 is 100 big multinational companies. But the fact of the matter is, these days, the top of those indexes are all the same big tech companies.
In similar weights.
Yeah.
So you could probably just reduce your admin and hassle and, just own like the diversified all growth or, any other of the, all world stock market index type ETFs that are out there. They're all much the same. That would be my thoughts. And if you just wanted to run a portfolio that just invested in that beta shares, diversified all growth or equivalent, that would be totally fine. There is no reason you need to do anything else. Now, if you want to run off and have a little dabble in a bit of Woolworths or whatever on the side, all power to you if that's what gets you excited in the morning. But you don't have to do that. You're totally fine just doing the ETF dance.
And then the age-old conundrum of selling down those ETFs, taking into consideration
I'm
tax,
surprised
or
the
just
Equity Mates
deploying-
community knows what sell means. There's no one seems to know how to sell in this community.
Holly said she's never sold
sold
anything.
it.
I know.
before,
Yeah, I know.
so-
That's what I'm saying. I don't even know. No one knows where the red
respect,
button
Holly.
is.
Just keep
Like,
collecting.
it's-
I'm on that
That's
vibe
it,
as
that's
well.
it.
Yeah.
No, I'm off this Holly hard. I'm off this that hard. Need a bit of valuation discipline beat into the Equity Mates community. But look, I do on the direct stuff. There is the right time to sell some of those stocks. Probably beyond the scope of today's conversation, but certainly you can just use the blue button, the buy button on the stuff like beta shares, diversified high growth, or all growth, sorry, but the shares, if you're going to buy shares, you're buying them to sell them. That's why so even if it is 5 years down the road when the earnings have quadrupled, there is a price, and they will trade at an overpriced level at some point.
I think the big takeaway is, you're certainly on the right track. What Bryce said earlier about, picking yourself up from the Appen experience and keep going, like that's something to be commended. And
Yeah.
I think a lot of people start with they've heard core and satellite and they start it, but they end up having a long list of shares and, not that much in ETFs. So I think the fact that you've got sort of 75% of your money in core ETFs and you're dabbling on the side, the building blocks are emerging and they look pretty good. So,
As long as you know that dabbling on the side is probably reducing your returns.
yeah.
In the long run, and that's the reality.
I started backwards, so we spent so much time chatting about Appen, which is like my biggest fail. But it was only after buying the shares that I read the boys' books, I did more research, and then I discovered the whole core concept. So during COVID, I just dawdled pretty much the whole time with the money in my bank account. I knew I had to do a core, but it was just totally analysis paralysis on all the ETFs.
Yeah.
And it's only really in the last 12-ish months that I committed to building what looks like an overlapping core. So I will adjust.
Look,
good.
it's
Yeah,
not.
yeah.
Don't stress about it, right? But I think look, if you never did anything about it, it's not really a big issue.
Yeah.
I think a lot of people we speak to seem to do this. They buy the shares first.
That was our story.
And then I obviously have never graduated to the ETFs, so
We'll get you one day.
Yeah.
We'll get you one day.
I think that's totally reasonable. I would just think about getting as much money invested in your optimal portfolio as soon as you can, and as soon as reasonable, and both from a mental freedom perspective and really having confidence and conviction in what you're doing, and not being and also from a maximizing your compounding on a risk adjusted basis.
Yeah. I'm pretty sure we even speak in the book, if it's not DHHF, the diversified all growth, it's the Vanguard one, which is VDHT, but they're designed to be the one-stop shop.
Yeah.
There is nothing wrong with having, as you said, Luke, that is a portfolio.
And there's, there's iShares, there's VanEck versions, there's Global X versions. You can pick your poison, right? Just do your research and suss out what you think the best deal is. But they all work. There's no difference between them. And I think for the beginner investors and people just getting started out, they get this analysis paralysis that Hollie's talking about, comparing ETFs and looking at the historical returns. The historical returns don't mean anything, right? It's complete forgot. Don't worry about them. What matters is the process that goes into them and how they're put together.
Yeah. So, Hollie, a lot of information we've thrown at you. We appreciate you talking us through the portfolio today. Any final questions for Luke before we wrap it up?
No, I'm pretty much happy with everything you said. I totally agree. I think, the dollar cost averaging into DHHF for the rest of my life, it just seems so, why doesn't everyone else do it? I don't know. I think I started off really complicated.
We ask ourselves the same question.
Bryce, why don't you do it?
I pretty much do it. I do.
I think Hollie, to answer your question, they're pretty new products in the scheme of things. Even when Bryce and I started investing, ETFs were a tiny part of the market, and a lot of the products we talk about today didn't exist. So, we've kind of all grown up with these products coming to market and getting more exposure. So.
Also just a national obsession with housing and there's so many reasons that
people love punting on stocks.
Yeah.
But
you make a lot of money punting on stocks sometimes. It's a pretty easy thing to sell to people.
Yeah. But in terms of, why didn't we learn about it when we were kids and that's why wasn't that how previous generations invested. It wasn't really available to them. So we're pretty lucky that we're investing in this moment when technology's brought costs down and we can take advantage of it.
Yeah. And what you've identified is right. Like it's just so straightforward and simple.
It seems too easy.
It seems too easy, but like that's the beauty of it.
Yeah.
Unfortunately, the world I operate in lives on creating unnecessary complexity to extract a living for themselves. So, there is really simple answers out there. It doesn't necessarily mean that they're the very best answer. Can you do better than that? Yeah, I think you can do better than that. And that's what I do for a living every day. But that being said, is that totally fine? Yes, it is totally passable. It's totally, but is it better than buying a portfolio of 30 ASX listed companies by a country mile? So, is it better than buying a lick? Yeah, way better than buying a listed investment company. So, look, that's kind of my view, and I think the guys are doing a great job of promoting that message as well.
The question is it enough? And the answer to that is yes. So we'll wrap there. Hollie, thank you so much for taking your time to submit your portfolio, come on the show and share your journey with the Equity Mates community and with Luke.
No, thank you guys so much for having me. When I heard that I was getting Luke, I thought I was going to be in for a fat roast, but no, this has been fun.
Look, behind the scenes, Luke is actually really nice.
I love the fact that everyone's scared. It's kind of exactly where I want them all. It's exactly where I want them all.
Maybe we should have a new
No,
segment.
thanks a lot.
Fat roast. No worries, Hollie.
Equity Mind.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.